Good evening. Welcome to Options Center. It is Thursday evening, 1/5/23. Welcome, everybody. If you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. And I just want to say thank you for all the support and growing this channel. We've had a lot of likes, a lot of views. Things are happening. Trying to get this information out to all you traders and hopefully help. I have a little bit different video tonight, and the reason is because on the higher time frames, nothing has changed. Even on the daily, we've been in the same consolidation for 13 days. Tomorrow will be our 14th day. And you can see right here, we have this possible pennant, bear pennant, which is a continuation pattern that breaks to the downside. We've been in this oscillating back and forth. It's well defined, and we're near the apex. And so we're in a decision-making area. Doesn't have to do it tomorrow, but you have job numbers, which is very likely to make that happen. Now on the ES, we're going to spend some time on ES, SPY, just to give a different perspective, and maybe we'll check out some SPX for the future with options expiration in mind, just so we could see if there's any open interest that's I haven't looked myself yet, but I figured I'd do it with you guys just to see if there's anything that stands out in the near term. Okay, so you notice we're still in the pennant. I said this on last night's video to look out for the MACD and the RSI for hints. Now, anything can happen when you have a catalyst, okay? So that's why I've put call protection, and I'll show you that on SPY, on SPY in a minute. But I said, check out this oscillation here. Yeah, we're still in the triangle on price action, but really we already broke down. We broke down already on the MACD. We broke down from the triangle on RSI. So that tells me there's a lot of weakness here. If you were a betting person with no regard, then you'd go naked options and just, a big position and just go for it. So there's a lot of hints saying that we're going to move to the downside, but I don't recommend that. That's frivolous. We're not here to gamble. We're here to make decisions that are probable. Okay, so our downside thesis is intact, and if we go over to SPY next, I want to show a few positions that we have. Oh, where'd it go? Dun, 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 it. Okay, sorry about that. We had a little glitch going on there. We're looking at SPY right now, and on one of our accounts, we're looking at what we were doing in order to play this range. Now, we've been doing this all week, but we're getting to the apex, and we're really starting to nail down. So I have these put positions, these major put positions on further date positions, and I have to reposition myself each time that we find out that we're not going to break down for the day. And let me knock that down. And so way out to, not way out, but with January 13th, options expiration, we're way out of the money because we're expecting a big move, at least 100 points. So 10 points in the SPY, 100 points in the ES and SPX. And we're looking, so a little bit out there. I'm a weekly type trader. I usually do swings for 3-4 days or a couple day trades, things like that, and also futures. And so this one in particular, we brought ourselves out to 370. Why in particular 370? I can tell you before we move on. It will probably show us right in the charts here. If I go to SPY, there's the options expected move. The options expected move, and there's a formula for this. I got it from Theo Trade. I was part of them for a while, is at 371. Also, that coincides with the support at 370. That's the options expected move for this week. So even if we don't decide to make the break this week, we're looking at, we gave it another week from Monday. So for the 13th, we gave it some time. In other words, we put some time on the board to give it to move this full 370 length for that options expected move. Now that could quite possibly happen tomorrow. And with seasonality for weeklies, with Friday, if that's bearish tomorrow, we could have some follow through or gap down on Monday as well. So we always want to give it a little bit of time. And we're looking at these 370s out here, but that's not the only ones. Okay, I have a few on that one. Let's close this grid. We have some January 11th. These are not as far, the 371s. We have a few here, a few contracts there. For puts. And I'll get to the point. Sorry, this is taking a little bit. My computer doesn't like to move very fast off time. And so we have some in the money contracts as well for closer time frame, and that's for Monday. So when we're, if we're going for some people call them lottos, but I don't think they are. I think we're being very theoretical on this. But when we get near term for Monday, I want to stay within in the money or near the money on trades like that. So those are the puts. And this is similar to a straddle. And I want to show you that more near term, we have quite a few. And when I say quite a few, it's we have maybe 20 contracts or so of out of the money near term. So actually tomorrow. So these are our hedges. If we get a huge move tomorrow, not even 100 points, we're talking not with the overnight, but as of close, we're talking about an 80-point move by tomorrow. And so I want to put these hedges on just in case the market takes the numbers and just says, hey, this is a very bullish situation and just wants to pop it to the upside. So we have our hedges on, but we have many, many, many more contracts to the put side. So that's kind of the strategy that I'm using right now. I may have some calls as well on the 9th. Yeah. So a little less out of the money for these calls here, 385, but I threw some contracts on there as well. So that's just an example of what how I play these situations where we have consolidation and we're ready to make a move, give it a little bit of time on it and let it play out. Now we start breaking to the upside or downside, and I'll show you on SPY. I don't usually use SPY in my videos, but if we start breaking this downside at the 380 or 379, along with this rising trend line, we start breaking that or we gap down from here, then we want to take off our hedges to the upside and just ride down because we know that this is a continuation move at this point. Now, opposite happens and we may not make as much money, but we're expecting a larger move. So if we gap up, especially if we gap up over this resistance, and notice I actually drew the lines more like a ascending triangle. And if you watch my past videos, this has always just been a triangle, but this is more of a bullish type look to it. If we gap up and start breaking and convincingly breaking this 385 with great breadth and things like that on the market, then we're looking for this move more to the 393 area, which is exceeding that 100-point move that we're expecting. So what we're going to do there is we're going to start taking off some of our downside plays, at least the near term, because we do expect the market to move up in that case. If we do move up, we do expect it to get to a certain point and actually move back down. So we may keep on some of those downside plays, but way out, a little bit more into the 13th, and so, but we want to take off like the January 9th. I hope I'm being clear on this, and I'm trying to play both ways, but we're definitely biased to the downside. This in particular, if you're just doing regular measured moves, if this is an ascending triangle, you want to take the neckline of the triangle and the width of the triangle. Just take that and the measurement. Oh, I did it opposite. Sorry. The top of the triangle to the neckline, and 100% move from there is right over there at that. If you notice, it's right about at the 397 area, which coincides right with that resistance. And we'd be looking for that if we broke out from the 386 resistance here, which is the neckline. We'd be looking at as our target, which just so happens, if we move over to the Elliott wave, just so happens to be right in our zone, actually the top of our zone for the 397, 618 retracement from top to bottom, if this is the way the count is. 1, 2, 3, 4, 5 as a wave 1, and then an A, B, C for a wave 2, which would, the target would be 397, which would be out of that position by then, unless we played lottos. But so that's the kind of thing that we have to do in this situation. There's so much sideways. There's so much time that's given us and nobody knows. Everybody's getting confused and trying to figure out which way it goes. Well, I don't care which way it goes at this point. We've been trying to play both ways, and we're getting to an apex, and now we're kind of playing a straddle type, I guess, strategy, just like I described in the trading tab there. So I just wanted to show you that, and also give you a different perspective from the SPY point of view. SPY, I don't use that on my for YouTubes, but just wanted to do that for you. And also, let's go over to SPX just to finish this off, and we'll look at a different perspective of what's to expect. So the options market, I do have them on my hourly time frame, and it comes right up here to you have the 39.23, you have 37.55, but there's a clear chart that I use for the expected moves that I draw myself. Again, from Theo Trade, this is kind of like that. The ballpark of where the options, and there's a reason why, but you can watch my video on options expected move if you're interested, but why the market should stay within this realm. And this week it's 84 points from this opening price, 38.40, excuse me, the closing price from last week. It should be 84 points to the upside or 84 points to the downside. And we've been obeying these options expected moves, the recent past weeks. But one of these weeks we're gonna come outside of them coming pretty soon, and I think it's gonna be to the downside. But you got to be ready for that upside too, because that's our target right up there, 39.23. If we start breaking to the upside, we expect it to hit here plus a little bit. Okay, and last but not least, I want to just go to that trade tab for SPX, and I want to go to the January options expiration for the AM, and just kind of see what to expect from. We have 75 strikes out. We're going to kind of expand that a little bit to see where the market may want to go after this week. into the next week. And then when you have the options expiration week, usually there's some sort of gamma attraction to these expirations from a large number of options open interest, which is over in this tab for puts and over in this tab for calls. And we're looking down all the way to, let's say, 3,700, nothing convincing. 3,750, you got a few going there, nothing convincing. A little bit more at 3,800. 3,800 seems to be the attraction at this point. But now you're getting something. So 3,850, we're getting a little bit of numbers there. And then 3,900, a little more numbers there. So it looks like we're a little bit on this bullish side, 3,950, and then a massive amount of open interest on the 4,000. So, you know, if you're just looking at open interest, it says to me, if we break to the upside, that's where we're going. If we break to the upside, that's where we're going. That's where we're going to end up. It will be that attraction if we get close enough to it. So just want to point that out. It's not a for sure thing. I'm still a bias to the downside, but if you want to check out my Elliott Wave paths, the roadmaps, I did that in the last video, so check that out. I'll put it up on top there, a tab up top, so you can check it out. And it'll also be at the end of the video, and you can click on the link. And it just gives you 3 different scenarios. They're all bearish. And I even mention the bullish ones, but I give you the bearish scenarios where we go up a little bit and down, or down, up, and down, or just straight down from tomorrow. So, all right. Thanks for joining us. That's all I got for you. Just trying to keep you informed in any way possible. New looks at the same thing, new looks at the same thing, just so I can keep you on my way of thinking, and show you that there's, you know, more complexity than just the videos that I put out there that just say, oh, we might go here, oh, we might go there. Why am I so bearish all the time? Well, this shows you on a micro term that I'm not just bearish, but this may go up, and then I start adding puts on to go down. Or how do I play this consolidation that's been happening for 13 days? And that's, you play both ways. Simple as that. All right. So thanks for joining us here at Options Center. Don't forget to like the video, and we will talk to you tomorrow. Good luck trading.